Good Friday afternoon to you. Welcome to the Jon Sanchez Show on News Talk KOH. It's a pleasure to be with you as we wrap up the week, and a pleasure to be with my partner, Jason Gaunt. Happy Friday, Jay.
Yeah,
TGIF, 5 exclamation points,
all
maybe
of them.
6.
Yeah, all of the exclamation points. I am very
Yes,
happy it's
indeed.
Friday for sure.
Amen. Amen. Oh, my goodness. What a show we have lined up for you this afternoon. We had a lot of moving parts to the market this week. We had a couple things happen in the after hours that you may not be aware of that we'll share with you. And then wrap up the show by I always answer the question, what is this market telling us right now?
Yeah.
A lot different this week than last week, Jay. We got a lot of things to kind of change around a little bit here.
Yeah, concerns around NVIDIA, OpenAI, the circular reference area. Is there an error? How do we take this? I think we talked about it a little bit this week. The
Yes,
market is also trying to figure it out, right? Are we,
exactly.
you're starting to hear more of the bubble cries out there from the citadels of the world. Again, Ken
Yes.
Griffin, not uncommon to talk his own book, but you're at least people are poking some healthy holes in the this ride goes on forever thought that I think is very much something that we should continue to discuss. Not that we're calling for some impending crash, but that balloons tend to inflate slowly and deflate quickly, so it's just something we want to keep
Is
an
that
eye
like your
on.
elevator escalator analogy you like to
Yes,
use?
it is.
Okay.
It just
Okay.
popped into my. I told
How's
you
a good one?
before the last shop that I worked at, and this is no one can get a hold of this because it's very tightly held. There was a list of JG isms that the traders on the desk used to keep, and
Okay.
some of them I'm proud of, some of them I'm not proud of.
Yeah,
But
some of it can't be repeated on the
yeah,
radio.
right. Always rich with analogies. Yes, yes,
Let's see, you manage 12 traders, multi-billions. Yeah, I bet there's a few
and
things choice out of
tons
your
of
mouth.
some stressful situations.
No, you never had any of those.
No,
Never had
never,
any of
never.
those. You got to tell the audience. It's
Yeah,
Friday. We can talk about it. You got to tell the audience about some of the stories because I love getting Jason's old war stories where you were there sometimes for 24 hours
yeah.
because you were a hedge fund, you were leveraged, and crazy things would happen, right?
It was crazy things. It was also just crazy timing. I remember you're working with eccentrics in general. Like we had a portfolio manager that, wonderful investor, but he was Russian and literally on Russian time. And so
Really?
like he would kick off his optimizations and we would know because we could see in our systems like late in the afternoon. And inevitably it was like, Thursday at 3 o'clock, which means they're not going to be done until 6, 7, 8 o'clock. And
Explain what
that's
that
when
means,
so
optimization.
optimization's simple math with a quantitative manager. Everything's built by models, right? They're not out there kicking tires saying, "Hey, is Nike going to make some cool
Right.
shoes next quarter?" They're pulling in all the data for Nike, earnings growth and sensitivity to the ruble and like is it raining on Wednesday? Like you name it, all these things were researched in quant land as to was there efficacy to a signal, right? And so they would create a model that would take certain things to say these are my top ranked stocks, these are my bottom ranked stocks, and the subject to their benchmark they would create a portfolio. And so their optimization is a lot of numbers running up
Right.
against borrow risk models, you name it, and it would kick out a optimal portfolio. Well, the analogy I always use, going back to the balloon we talked about at the beginning, was they're trying to stuff a balloon inside of a box, right? Inevitably, you push in one area and you're overweight European technology, and you smoosh that back in, and now you're, underexposed to U.S. large
Right.
caps.
Right.
So they're doing all this stuff, and eventually at the end, you get an optimization that fits within the constraints, and then it gets handed to the traders, and we're building portfolios, and we got to strategize as to how we're going to trade this thing because some things cash settles certain days and some stocks are less liquid than others and some are need to be reported. You need to go out and get the Chinese yuan bought first before you could go trade in China. And so there was all these little
So it was a
nuts and
pure
bolts
global
would go. So
portfolio.
yeah, so you are full on doing all the things. And we were actually just talking about it here in the office this week. I was standing in the operations team room over there, and Shark Tank came on. And Shark Tank comes on at what, 5 here or something, or 6, whatever. The market's well closed by the time. Well, on the East Coast, Shark Tank comes on at 9, right? Because the
Okay.
market's closing at 4, blah, blah, blah.
Right.
So whenever I hear it, I get these like visceral feelings of like,
Like a dog hearing a siren.
yeah. And so we're like, I won't say his name, but so and so is running optimizations. And yeah, we would be there giving out orders at by the time he was done at 11:30 and we finally got it built, we were there until 2, 3, whatever, sometimes watching others come in the morning, just getting these portfolios because we had a really good team and all the traders would kind of stick around because there's different parts and different things and we'd work together on it. But yeah, I've seen the same time on the clock the next day more than one time.
Right. Wearing the same
Sure.
clothes.
Yeah. Right.
I've had that happen a few times. Yeah, it's not a good feeling. Oh, that's a great story. I love those horror stories. All right, well, let me tell you what we have lined up for you. We put together a list of what we were calling 4 takeaways from this week, right? There were, as Jason was alluding to at the beginning of the show, little air coming out of the balloon in the AI trade, which, again, completely different than last week. We had some inflationary data come out today. The Fed's favorite measure of inflation, the PCE. We want to talk about that because, again, this is all centered around where everybody thinks the Fed's going to move on the next meeting in October. So we'll get into that a little bit. Big announcement that we woke up to this morning, tariff announcements, brand new, fresh tariff announcements. Like, hey, how about 50% on any heavy trucks that come in, semis that come in from around the country. So furniture, upholstered
furniture. Yeah. Right.
Yeah. Some pharmaceuticals. So we saw some, immediately this morning in the pre-market session, we saw some of our US based companies that furniture companies that import a tremendous amount, as most companies do. They import a tremendous amount of their furniture from the likes of Vietnam and some other countries. And all of a sudden, man, they're just selling off like crazy, right? Because now they're going to be facing all these massive tariffs. So again, that was kind of just came out of nowhere, right? I don't know about you. I didn't see anything that this was even being talked about. So we had that to deal with today. So we'll go into a little bit more detail. And then, of course, we're going to look out into next week, right? We've got the non-farm payroll numbers that are going to be coming our way next week. We got that'll be again on Friday. And of course, Wednesday, we get the ADP numbers. And oh, by the way, Jason, this little tiny thing called the government may shut down on the 30th at midnight. And, they're talking, last government shutdown, 800,000 plus government employees got furloughed. Yeah, they get paid, but they get furloughed. So I got some stats for you. I didn't get a chance to even share it with you. So it'll be a surprise to you how the market reacts in a government shutdown scenario in case that happens. Yeah, Trump's kind of holding his feet, and then Schumer is, and no one's budging at this point. And I think the Republicans are back on vacation now, so I don't, or the House side of things. Yeah,
How many
it's going to be.
How many have we had shutdowns? And I don't know if you don't know off the top of your head. Like, I feel like this is that perpetual boy who cried wolf.
That's not part of my deck here. I'll look that up. We've had actually quite a few. We've actually had quite a few, and it's really, really interesting of how the market reacts to these shutdowns. Right? Everybody always panics. We've spent a lot of time talking over the years when we're faced with this situation. A lot of time over the years, I go, oh boy, what's going to happen here? Technically, the market really doesn't get all that freaked out unless it lasts for a period of time, an extended period of time. So, we'll have to watch and see, again. And don't forget, there's a thing called a partial shutdown. And then there's, of course, a full government shutdown. So it could be one variation or another over that. But yeah, I'm looking at this today. Well, let's jump into it. What the heck? It's Friday. We can jump around here. So this is a study from Bank of America that just came out a few hours ago. And it outlines a wide variation of how the S&P 500 has performed. So the bank said the S&P 500 averages loss of 5% the week before and the week after the government shutdown. So S&P has averaged a loss of 5% the week before and the week after a shutdown. Now that's according to data going back to 1990, right? It's a pretty good data set there. But when you shrink that period down from 2018 and 2019, the S&P actually rose 6%. Right. So I think a lot of it depends upon what's going on in the rest of the markets and the economy. What kind of tone are we in at that point? But, something I was kind of surprised about. Our last shutdown, Jason, was if we go back to, let's see, 2018. Okay. So December of 2018, we were shut down for 35 days. So it expired on January 25th of 2019. That was a partial shutdown. The S&P gained 6%. Your VIX down 8 points. The dollar index down 2. One before that, January 20th of 18 to January 22nd of 2018. So just a whopping 3 days. S&P rose 3 points. Let me see if I can. All right. So then we had one in October of 2013. That one was October 1st to October 17th. S&P gained 3 points, 3%. And then we go all the way back to 95 and 96. So that was a 21-day shutdown. S&P lost 3. 95 for 5 days, November 14th through the 19th. S&P gained 3. But here's an interesting one. October 5th of 1990. Were you even born then? Through October 9th of 1990. Yes. Just 3 days of a shutdown, and the S&P lost 5%. So I would say,
I remember
if we punch
that vividly at 15.
So if we punch this into the data set, you'd probably go, okay, I'm going to rule out from, let's just say, anything pre 2013, that October.
Yeah, when was the debt ceiling announced? I wonder, is that like how long has that been around? I know back in the 90s, I don't think we had a debt ceiling. I'll look at that while you answer.
Yeah, that one has been a while. So if we throw out the data set of, from 95 to, in prior, so we just focus 2013 and then the two shutdowns in 2018 and early 2019, it can really vary. So it looks like the longer it goes, i.e. that 2018 to 2019 one where we lost gained 6 points, the market didn't get too concerned on that one. I remember that time period too. It was kind of one of those deals, I'm sure you remember, where you kind of come in and it's like, well, maybe today they're going to do it. They dangled a carrot, I guess. And it wasn't like, this is it, we're done. There was a lot of negotiations going on, if I remember correctly.
Yeah.
So you look at, okay, so we got 6% gain there during the shutdown, 2% gain in 18, 3% gain in 2013. So to the point,
we want them to shut down.
Care. Yeah, doesn't really care. Yeah.
So shut it down. The debt ceiling's been in place since like 1917, modern form since 1940. Really? But it did say since the 90s, it's become more of this political lightning, which I'm sure everyone would assume, yep, that makes sense because they fight about everything now. So
everything. Yep. So back to our what we're going to watch out for next week. That's obviously a major point that we will see again on the 30th is the looming deadline, midnight the 30th. All right, so that's what we got lined up for you. We're just going to cover a lot of different things. Sit back and relax. Let's turn it over to the wonderful Kristen Snow. Happy Friday, Kristen. Happy Friday, and welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. Well, again, before we get to some of the big happenings of the day, overall, it was a very good day. We had our periods this morning where I was starting to guess whether it was going to be a good day. We started strong, and then they tried bringing it down, right? They tried rolling over the tech and so on and so forth. But man, all that matters is where we are at 1 o'clock, as I like to say. How about a 300-point gain on the Dow, 0.65% to a close of 46,247. NASDAQ rose 99.44%. S&P up 39 or 0.59%. On the commodity side of things, we got a little bit of action going on there. Oil prices, no action actually on that one. There was gold though. 1 cent rise on oil, 65.69 a barrel. You got to take a pause here. $38.10 gain on gold, 3,809 an ounce. It's just on a tear. It's just absolutely on a tear.
Yeah, and I mean, again, momentum, right? That's what a lot of these trades are. Silver, even too, $46, and it's like a magnet towards 50, right?
$30 a few months ago.
Absolutely, and that's just I mean, again, momentum is your friend until it's not, right? There's a lot of commodity chasing. Some people who are moving assets from growth in the S&P into what they view as a better safe haven. You've got that crypto versus gold pair that's gone on with gold strengthening recently against Bitcoin that's been weakening. Solana's down 15% pretty recently. So there's a lot of, I'd say, undercurrents in the alt space for sure right now. But the dollar clearly is part of the reason. You've got pretty big moves there.
Brings up a conversation I had with our client, one of our clients yesterday, and it was a husband and wife, and they were asking, should we take some money and put it into gold? And I think this is a good reminder because are you getting any questions from clients on that?
Yeah, I mean, it's always part of a conversation. I would say most of the time, sure. Yeah.
So here's just a couple things to remember if you're thinking about that, right? So first of all, yes, you have gold at basically all-time highs. Is it going to continue to run? Anybody's guess. Maybe it will, maybe it won't. Who knows? But there's a bigger question when you think about buying physical gold. I'm not talking about it, through an ETF or anything. I'm talking physically going out and buying it. And this is the advice that I gave our client. I said, look, I was about 3 years into this business, and I got into an argument with a client that I regret to this day, but it was a very valuable lesson. And being a young broker, I was all, cocky, and I'm like, he's like, own what I don't remember what it was, 20% of my portfolio in gold or something. This is again early 90s. And I said, basically, that's not very smart, right? And I gave my reasons. Gold doesn't pay a yield, a dividend, and it's illiquid in a lot of cases, and all this stuff. And so we went back and forth, and I finally realized, okay, I'm kind of pissing this guy off, so I better shut my mouth, right? I went home that night. I'm like, you know what? I really did a stupid thing by doing that. And from that point forward, I made it a personal rule that I would never argue with a client when they want to own gold. And the reason I say that, and it has served me well, is gold is so unique. I mean, sure, human element, you want to buy it because it's going up, it's human greed, right? But you got to look at it more seriously. And it was funny because this client, Jason, said the same thing I heard from this guy back, 30 some odd years ago. And that is, if you know what hits the fan, at least I've got some gold and I can go to the grocery store and I can buy a loaf of bread. Yeah, Jason's shaking his head. Nope. And that's exactly it. So I said to my client, or our client yesterday, I said, last time I checked, grocery stores don't take gold, number one. By the way, if things got that bad where our dollar's worth nothing and so on and so forth, do you really think your grocer's going to take gold? No, they're not. They're going to be shut down because they're not going to go pay their suppliers, the bread supplier, for example, the baker, to bring in the bread. So the whole system would just collapse on that side of things. And so that kind of opened our eyes a little bit. So those of you that want to buy gold because you think it's the end of the earth, it's the one great thing you can have from a leveraging and a barter standpoint, I would think twice about it. We're not in the 1800s, so I just don't see how that would work. Maybe, but the bottom line is, as I told her and I told him 30 years plus years ago, I said, look, no one can tell you how much gold to own, right? Most of us in the portfolio world, 5, 10%, but probably no more than that. If you want to physically own it, great, because it's a tangible asset. And she's like, well, you guys have done a great job, with our portfolios and everything else. And I complimented her and I said, thank you very much. She goes, but it's intangible. And I said, no, you're right. I mean, the stock market's intangible. You can't touch your stocks and your investments and things like that. And she goes, but I can with gold. And I said, yes, you absolutely can. So the rule of thumb is, if you feel it, you want it, you like to touch it, get it whatever you want to. Just know, the cost buying it, the cost selling as far as the commissions, so on and so forth. And again, it's kind of like about the last thing I said. It's very similar to when clients ask Jason and I, how much emergency cash should we have? And our rule of thumb is, or what we say is, Wall Street says in our textbook, the way we were trained, you should have 3 to 6 months of living expenses. But what do Jason and I say? Whatever you're comfortable with, right? It may be a year, maybe 2 months, whatever it is, same type of thing. It's a personal decision.
I don't have a lot to add. I think that was very good. The irony is I know who this client is, and they own
Yes.
gold in their portfolios because we
Yes.
built it in there. But
Yes.
yeah,
Yes.
I completely and I literally use a similar line. Like if you think we're going back to the old-timey days where it's gonna be like flipping little obscure coins on the table and be like, "Get me a horse and a bath and a woman," and like that's not what's gonna happen. But agreed on the fact that ultimately gold is framed as a no bet, right? So
Yes.
I sell your portfolio, you're worried about the markets, and theoretically we would buy US dollars. You still have exposure to inflation. You still have, your buying power can be eroded while you're sitting in what you view as a safe asset. So owning gold, again, in the way that people think of it, is it's a stable value item. It doesn't make more gold. It doesn't pay more dividends, to your point. It's just a shiny rock. And I don't mean that disparagingly. It's just a place to preserve your buying power. An ounce of gold should buy a nice man's suit over time, is the analogy that I was always told. So, you want to own things that go down when other parts of your portfolio go up, but you never want to be more concentrated than you feel comfortable with, because very much to your point, if the stuff does hit the fan and you do need things to go purchase other items with, you could also be in a situation where you're a seller when everyone else is too, right? And so your buyer is going to be well aware of that, and they're not going to give you the price with which that you think you're going to get. It probably could be lower. So, and physical gold too is also an asset that can move from person to person, beneficiary to beneficiary, with a, I would say, muddier connection stream, right?
Yes.
Versus stocks and things have capital
Yes.
gains associated with every single transaction. So
It's
those are
very
other
complicated.
reasons why I've seen people pitch for owning those
Absolutely.
types of assets. But yeah, the last part I would add is when you first started discussing it, oftentimes people view gold similar to how they view religion, right? They're either really rigid on it or they're not, right? Or politics. And so I thought you were going to go the direction of don't fight someone over religion or politics, because
Well, that too.
oftentimes gold ends up being
Yeah. Yeah.
something
Let's see.
similar.
Gold, religion, and politics. Don't bring it up
Yeah.
at the Thanksgiving table
I think
or with
that's
your
going to be
broker.
it. Yeah, that's going to be somewhere on our website. We don't care
That's
to
right.
fight
That's
you over those three things.
exactly. Exactly. All right. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hey, welcome back to the Jon Sanchez Show on Newstalk 780 KOH with Jason Gaunt. Once again, a 300-point gain on the Dow. NASDAQ rose 99. S&P up 39. All right. We're wrapping up the week on Wall Street. We haven't got out of today's events yet, Jason, much less looking forward. Do want to bring this up. This is interesting. I don't know if we will see any action. Let me actually bring up the stock here real quickly before I open my mouth and see if we got any action in the after hours on this. Nope, not really. Nothing negative. Just not long ago, matter of fact, about 2:37 is when the news broke. President Trump demanded that Microsoft fire Lisa Monaco. She's an executive who served as the Deputy Attorney General during the Biden administration. This, of course, comes the day after the former FBI Director Comey being indicted. Here's what Trump said on True Social to his 10 million followers. Imagine, you think you're having a bad day today? Imagine if someone comes in and goes, "Oh my God, you're on True Social." Here's what the president said about this woman. He says, quote, "She is a menace to U.S. national security, especially given the major contracts that Microsoft has with the United States government. Because of Monaco's many wrongful acts, the U.S. government recently stripped her of all security clearances, took away all of her access to national security intelligence, and blamed her for all or banned her, from all federal properties. Microsoft has not responded to the request." So
Wow.
I don't know what she did when she was under Biden, but obviously it's something the president does not like or does
I'm
not
not a
like.
fan of. Yeah, exactly.
And he's calling for her to be fired. So yeah, so that just happened. But yeah, no reaction on Microsoft. All right, let's go back to last thing I want to mention, the bond market side of things. We covered oil, we covered gold, covered what the markets did. A little bit of an uptick this week, Jay. 2 basis point today on the 10-year, 419, up 5 basis points for the week. You're shorter into the curve, as you so correctly predicted. It just keeps moving higher and higher. The 2-year up 7 basis points for the week, 3-year up 9, 5-year up 8, so on, and the 30-year only up 1 basis point for the week. So that shorter into the curve, so interest rate sensitive right now.
Yeah, and PCE, we got that data out today. That was,
Yep,
I would
we'll
say,
cover
in
that.
line. It wasn't great. It wasn't bad. It was good enough. I think jobs next week are going to be even more important next Friday, merely because I think the Fed's looking at that ball less than they're looking at the inflation ball near term. But yeah, I mean, the bond market is just toying with things a little bit to say, rates may not go down as fast as you think they're going to go down, and people will bet with their dollars, and that's really that bond market tells you more than what the Fed folks can jawbone right now. So, but still pricing in a cut and a half so far the rest of this year. Going
Yeah,
forward, I'm just saying it's not 100% for 2 cuts. It's sort of
yeah, we're north of
50-50 for
70 to 80
yeah.
yesterday.
So
Probability for both. Yeah, yeah, exactly. All right, let's transition for today. Okay, so let's move it on over to the week, right? What were some of the major things that we dealt with this week? Let's go back to the beginning of the week, something that we have discussed literally every day on this program this week. And that was the $100 billion major deal announced between NVIDIA and OpenAI. So the big thing this week was, from my perspective, I want to get your take on it. First big thing for me was that we saw a big bump in NVIDIA. Obviously, OpenAI is not publicly traded. We saw a big bump in NVIDIA throughout the week. I didn't get a chance to calculate how it did for the week. But more importantly, it brought to light, as we've discussed, Jason, the circular accounting. Once again, for those of you that have not, don't know what we're talking about, please go back and listen to our podcast, especially on Monday. But in a nutshell, what it is again, NVIDIA signed this $100 billion deal for OpenAI, again, the parent of ChatGPT, to purchase, basically $100 billion of NVIDIA chips. Now, wait a minute. You just said NVIDIA is investing $100 billion. Well, the way the numbers worked out, this is called circular accounting. Every roughly $10 billion that OpenAI received from NVIDIA, they have to buy about $35 billion worth of chips. So it's kind of a 3-to-1 ratio. So then everyone started going, well, wait a minute here. Is NVIDIA kind of buying its earnings, right? They're putting money in, but saying you got to, not as an investment, but really to fund buying more NVIDIA chips. So that's why they're calling it circular accounting. But what's interesting, Jason, is that really raised a lot of eyebrows this week, not only in this particular deal, but just really AI in general. Everyone's going, wait a minute here. And you and I have discussed this. Where's everybody going to be making money? It just made everybody a little bit nervous, which should have been great news.
Yeah, I mean, it probably, like anything, we would go back to 2000 and people say, oh, these names blew up and so on and so forth. But they're a heck of a lot higher now than they were then. It's just that there's a 50 to 70% drawdown in the middle that hurts a whole heck of a lot. And many of these companies will be X as big as they are now, but many of them will be gone. Right. And I think, we've talked again on that Monday podcast that people should check out. We discussed the simple math around, well, if the data center costs $100 million, for example, and every 5 years you got to spend another $30 million to update it, yet it only has profit of 20 million. I'm just making all these numbers up. It doesn't make sense. Like, they're not going to make enough money to even buy enough chips in the future to keep themselves current. How's this all going to work together? And there's a lot of that, just wait, right? And I think that's part of where investors are sitting here, many of them holding a lot of these big names, the NVIDIAs, all of the bank shots on AI, and going, okay, now it's time to do math. And that's like any time. That's when things get concerning. When the dream part fades and you start going, wait a minute, Tesla just makes cars, right? And that's when people start going, oh, well, GM's valued at this and Ford is valued at that. And then it swings back to, well, no. You got to think about robots and solar and this, that, and the other, and self-driving, and like, oh, okay, let's bid it back up. And then after a while, people go, wait a minute, they just make cars, right? And so we're in that NVIDIA, they just make chips kind of phase. And then I'm sure months from now, it'll be, oh my gosh, there are all these things in cancer curing, and all the medical device companies are going to need them, and hospitals are all going to need their own data centers because of all the data that they have from all these. And it's just, it's a very cyclical thing.
Yes.
That's what the market does. But today or this week, the skeptics were more in charge. Not to say they're going to win, but near term skeptics are certainly getting a little more.
I think that's a great point you bring up, and a good lesson for those that were not involved in investing back in the .com era, right? We're about as similar now as of any other market periods between 99, 2000. There's really been nothing else like this because we haven't had any great new technology like AI is. So that's why you hear us talk a lot about the similarities between 99, 2000, we'll call it the .com era, to now the AI era, right? Just a lot of similarities, some questioning, some accounting that's in question, and so on and so forth. And what do we learn from that? Exactly as Jason said, you're going to have a handful of winners, but you're going to have two handfuls of losers, right? So you got to be very careful. And that's why we've said, full disclosure, we do invest in many of the AI names, but as part of a diversified portfolio. And that's what we recommend for people. Don't put, unless you're, a pure gambler, don't put all your eggs in one basket. You may hit a triple or you may strike out. I mean, if that's the purpose of that bucket of money, cool, that's your prerogative. But if you're doing it as far as building wealth for retirement or something like that, just make it part of your portfolio, or your diversified portfolio, because as Jason said, you can wake up one day like we did this week, and this momentum on NVIDIA, just as an example, it just came to an abrupt halt. Right? Everyone thought, oh my God, this thing was just going to rip higher. And then it just struggled the rest of the week.
Pretty much traded sideways all week. It was up strong on Monday and faded throughout the week.
Look at Oracle, right?
Yeah.
After the big previous week, it's just struggled ever since that. So yeah, it's just it's a fun one. But yeah, don't miss our Monday segments with my brother, Dr. Dennis Sanchez, the AI doctor, when we really get into these AI discussions in depth. And again, if you missed
I enjoy those conversations a ton.
I do too. I have so much fun. I have so much fun. Just it's great talking about technology, because something that we all eat and breathe. All right, when we come back, a couple more things we want to mention. Take a peek into, as Jason mentioned earlier, we have non-farm payroll numbers this week. Kind of run through what the projection is there and wrap it up for the week. Let's wrap it up, speaking of which, with the wonderful Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH.
Tough
all right.
Crowd. Tough crowd.
Yeah. We're getting, as you all know, my daughter produces the show, and she happens to be sitting with my other daughter, Brooke, and they are just criticizing me, the color of shirt, my facial expressions. Now I'm getting the middle finger. Yeah.
Check out the podcast. Check out YouTube.
Podcast.
Check out our YouTube station. You can see us mocked.
Yeah. Maybe my marketing director could come on and talk about the YouTube space and the social media and everything. But
Technology.
she's a little camera shy today. It's Friday. Everybody's in a slap happy mood, that's for sure. All right, my friend, let's start fast forwarding to next week. We've got U.S. non-farm payrolls and unemployment, of course, coming our way on Friday. Let us kind of tell you what the street is looking for at this point. All right, Jason, here we go. Last month, meaning August, because this is going to be September's at us. So last month, 22,000 new jobs created. Economists are now looking for a whopping 57,000 jobs.
Yeah, I mean, that number is much smaller than what we've been dealing with. I mean,
Boy, isn't that the truth?
jobless claims this week were better than feared. So the market was actually unhappy. We're in a good news is bad news phase, right? Where the market is more excited about interest rate cuts. So if we get a weaker than expected non-farm payroll number, it will be talked about, right? Will the
Yes.
Fed speed up? Will the Fed slow down? You see too good of a number, the market may react negative
That's right.
to it to say, oh, inflation's happening or jobs aren't as bad. We don't need to cut rates. So.
Yeah, exactly. All right, let's go to the private side, the non-farm payrolls on the private sector. 38,000 jobs is what they had in the month of August. Looking for that to jump up to about 60,000. That'll be an interesting one. That's a big jump up in the private sector if that happens. Unemployment rate, looking for unchanged. Keep it at about 4.3%. Other than that, it could be kind of a boring report. Really could be.
Yeah,
And
but the
so,
market will key off it. I think the market's going to be staring at it all week. So we could, barring some outside thing geopolitically, it could be maybe a dull week where jobs is all we talk about.
yes. Well, almost like the PCE numbers, right? It's like there was so much focus on the PCE numbers this morning and didn't turn out to be much. Let's hit that real quick. We just kind of hit the highlight. So personal consumption expenditure, PCE, we call it. That's the Fed's favorite measure of inflation. That was released this morning at 5:30. So you always get personal income, personal spending first. Y'all are doing a really good job spending your money. You're spending
Keep
more
going.
than you're making, according to the data. Personal income was up 0.4% for the month of August. Personal spending up 0.6%. Now we move over to the PCE prices. And remember, the goal here is you want to, what the Fed's goal is, they want to get this down to around 2%. Now they're a long ways from that because if we look at the year over year numbers on the PCE prices, 2.7% year over year on headline. You strip out and you get down to the core, up about 2.9. So regardless if you go headline or core, we're a long ways away from the Fed's goal of 2%. And I saw, I'm sure you did too, I saw a really interesting interview this morning on CNBC, right when this report came out. And these different economists were arguing like, this 2% mandate or goal of the Fed, that's been around for years. Could it be time that they go, wait a minute here? This is something that's just not going to ever happen. And that's kind of what the economists were saying. Like, we don't see any way that this number can get down to 2%.
And that could be whatever the Trump appointee starts to jawbone about, right? That mandate of old is not necessarily the new mandate, right? We'd rather see growth, higher inflation numbers, are not our fault. Those were Biden, and now we're in a now more growth-focused environment. Remember, the Fed at 4, now at 4 to 4.25% versus PCE at 2.7. They still have a lot of room to come down and continue to be restrictive. So I still think they cut twice this year unless this number goes the other way.
Yeah, absolutely. All right, let's wrap it up with what this market's telling us. You go 2 points, I'll go 2.
Yeah, I mean, I think we'll probably be fairly range bound over the next week or so into the jobs number. Still concerned about the tech trade getting a little bit tired. Not to say that it can't continue, but I think that's going to be a key focus next week for sure.
Absolutely. I think my focus is going to be, we're going to be kicking off earnings numbers here in a couple of weeks. So obviously we want to see what that looks like and continue to watch the real estate data. This is another area people are getting very frustrated. Mortgage rates have not come down. They've gone up since the Fed cut rates, and that's kind of keeping a lid on some economic growth there. So we'll watch those factors. All right, my friend, I wish you a great weekend. God bless all of you. Thank you so very much for joining us. Have a great weekend.